Remember my friend Mike from the first video? Here's what it looked like the day he made his life-altering Bitcoin bet. As Mike saw this happening, he realized that the market was entering a period of extreme volatility, and thus extreme opportunity. So that's when he took action, by using options. Moments like this, when price action reaches such volatile extremes, is when the magic of option buying reveals itself. Options are financial instruments that offer a simplified way to place bets on future market movements. And the more extreme those movements are, the more money you can make. Just ask Mike. I'm your guide JJ, and in this video we'll go over the basics of options, and how you can use them to take advantage of volatility in order to make money no matter which way an asset moves, up or down. To start, let's define what an option is, using Bitcoin options on CoinCall. Each options contract here represents the right to buy or sell Bitcoin at a specified price on a specified future date. These contracts come with three essential components. They are strike price, expiration date, and premium. The strike price is a predetermined level which you expect the asset's price to reach or surpass by a specified date in the future. That specified date is known as the expiration date. It's the point in time when the contract expires. Think of buying options like trading on a shot clock, and the expiration date is when the clock runs out. The premium is the cost you pay to buy an options contract. It represents your risk capital, the amount you're willing to invest in the trade. You cannot lose more on an options trade than the amount of premium you pay. If price expires without reaching your strike, the contract simply expires worthless, with no additional losses incurred. Now, these are the basic components of how most options work. But remember when I said before that you can make money no matter which way an asset moves? That's because options are broken into two types, based on whether you're betting that it will go up or down. When you buy a call option, you're betting on the price to go up. To be more specific, you're betting that it will reach or surpass the strike price of your options contract by the expiration date. Let me show you an example. So if you buy a call and the price of Bitcoin is above your strike price at expiration, then your profit equals the price of Bitcoin at expiration minus the strike price and amount of premium paid. In Mike's case, he loaded up on call options in 2020 during the COVID crash while Bitcoin was trading near $3,000. Let's break down his trade. Mike bought a call option set to expire in December 2020 with a strike price of $10,000, and he paid $100 for each contract, also known as his premium, or the amount he was risking. By the time these contracts expired at the end of December 2020, Bitcoin was over $35,000. To calculate his profit per contract, you would take $35,000, the price at expiration, minus the strike price of $10,000, minus the premium of $100, bringing his total profits per contract to a whopping $24,900.
Now, fortunately for Mike, he bought a lot of these contracts and multiplied his profits. Now, conversely, you can also buy put options if you think the price of Bitcoin will reach or even go below a specified price by a specified future date. So let's say Bitcoin is currently trading around $37,000, but you expect it to crash by the end of the year, or you want to buy insurance against your Bitcoin holdings just in case it does. What you could do in this scenario is buy a Bitcoin December 28, 2023, $30,000 put option for $298. Again, all of the details of the option are here. We have a strike price of $30,000, an expiration date of December 28, 2023, and a premium of $298. Now, let's say by the end of the year Bitcoin crashes to $20,000. Time to celebrate. Your profit per contract that started out as negative $298 of premium will turn into over $9,700 of profit. Again, the way we calculate this is the strike price minus the price at expiration minus the premium. So if you go on an option spending spree like Mike did with his trade and buy multiple contracts before this hits, you'll be joining him on his catamaran in no time.
Now, this is just the tip of the iceberg in options trading, the basics. As with so many market topics, the possibilities and methods for extracting profit are seemingly endless. In the next video, and throughout this series, I'll be guiding you through the game behind the game of options trading. You'll learn practical and easy to understand concepts and strategies that you can use to profit off the price movements of Bitcoin and Ethereum regardless of direction. Follow along with us, and you too might be living the high life like Mike in no time.